Hello, hello, hello. Good morning, everyone. Happy Friday. How is everyone doing? Good morning, Wavy. Good morning, Ted. Good morning, Josh. You think the markets will fade today? I wouldn't be surprised if it was choppy. Little rally this morning didn't hold so far, but we'll take a look at the charts and see what they're telling us. Just a reminder, Michigan consumer sentiment preliminary is coming out in just under an hour. Forecast 61.4, down from the previous, but we'll have to see where these numbers come in. So, by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term viewers, please continue to like the videos and leave some comments. Good morning, Daniel. Again, oh, what a trading week. What a trading week. Hey, Christoph, how is everything in Europe? Let's see. Just peek at the Christoph is here. Let's peek at the DAX. By the way, I'm keeping an eye on this little pattern. This is still a potential double. So DAX below 13,333. That would trigger the potential double again. And then there looks like there might be a minor little topping pattern here, but we will have to see if this rallies up. There could be a little minor double. Keeping an eye on that. Hope you had a wonderful week. DAX against also the rotation zone. Lots of things are against the rotation zones, getting up close to it. That's why we watch these things with that spike up this morning, getting close to that top of the area of the rotation zone on the S&P, which is a very key area. And just above that, even if you spike right above that, we have that first target of the double, the 43.44. We have just below that the harmonic 43.37. So even if it runs up again, we have a lot of overhead resistance here. What am I watching on the shorter term? Right now, this is the prior resistance level from the March 9th, and we've returned there with a couple of different harmonics. I've updated my retracement harmonics. The purple ones are from the lows we put in back on the 8th of March. So the real key area you see now is essentially the low from the 10th, yesterday, which now lines up at about 42.09. So we start moving below there. I'm shifting back to bearish mode, but until that happens, we have a fair amount of key support right in this area. If we did drop below it, my next support area is about 42.55 to 42.60, and that's some pretty significant support. So that's where we could be in for a choppy Friday. And it will be interesting because next week we do have the Fed and we have options expiration. So we could get still some volatility next week. If we did drop below here, then the next support level is, I'm definitely going to pay attention to this 50% run-up level because we see how many times the market reacts to it. But we pretty much have a support zone I'd fine-tune about 42.33 to 42.24. So that's it for the S&P. We're done. Hey, thanks for spotting. Yeah, I'm gonna rotate that in. I used to do it all the time, and now based off everything that's going on, I think it is important to include the DAX, especially giving us some positioning based off Europe. Good morning, Ken. Good morning. Let's see. Good morning, Mike. Looks like they're gonna hit oil. I just took a new stake in NOV in the pullback. Where should I consider pulling the eject button? I have a big position in options. Do you ever take a small position? Options 22. We'll take a look at NOV at the end. One last rally before the FOMC crash to wipe out the remaining dip buyers. It's going to be interesting because with this holding up and the VIX dropping a bit, see, we have the VIX pulling back a bit. I wish I had real time on the VIX. They don't even offer it on this platform. And I can't show my other trading platform right now because of all the account information, but it's pulling back a little. It's hovering right at that 30 mark, but this could be interesting because you have a lot of people who have bought protection, a lot of people who have bought puts, even in the hedge fund space, and with the VIX dropping, those puts are losing value and the market's sort of stalled out here. So we might see some unwinding of the puts and then how that ripples through with the overall rehedging will be interesting. That's why I'm still, we have the core patterns, but then we still have a slight bullish bias. Now, I do agree that longer term, because I am bearish longer term, we're going to get another rollover event. What's that going to be, whether it is the Fed or something else? I do not know yet. And that's where I would just rather trade the price action. I updated the key levels on the NASDAQ. Again, can't get really bearish until below 13,384 again. We had this nice double overnight, really nice double overnight, and it did qualify because the first and second targets are still within the candle bodies and just running up there. And I use the conservative side because those are the only targets that worked. And we could not get a close above that final target. You can see we got the little spike up above there, almost to this other harmonic, and then pulling back now, just dipping below this key resistance back on the 9th. It's which wasn't a terribly strong sign with the NASDAQ. If it does pull up back more, I'm watching 13,670, and then below there, my major support zone is about 13,571 to 13,591. And that's where the first cross of the 4-hour rotation zone is. I wanted to leave this on the charts until I got up there, just trying to show people how that can work and play out. So again, to the upside, I'm keeping an eye on this 13,861. If we get through there, minor would be 13,911 to raise stops on any intraday positions, and then 13,947 on a strong rally back up, which would be the first target for the double. I don't know if I covered that on the S&P. Again, the minor areas is 43.18 to about 43.26. Back through there, my major target then, if we do rally, is 43.38. We have the harmonic projection and the first target of that double, and just above that 43.42 we have this. But so far this is not a strong price action candle, but we will have to see how that looks on the open. Again, Dow, there was no shorter term pattern on there. The only decent one was the NASDAQ. Dow trying to get above this 33,500 level and then reversing back down, not able to hold support at all at this point. And this is why we could be in for a choppy day. 33,186. And then back below that, I'm really keeping an eye on about 32,949. If we were watching the harmonics on this run up, the key line in the sand is right around the lows from yesterday, and the 62.5 at 32,785 level. That shifts me back to bearish long-term and bearish short-term. But until that happens, and again, if you don't have a trade, don't force anything, because I completely agree with the choppy potential conditions. Russell coming back up again, this 2050, 2052 area, and could not get above that yet. That's still running up close and then dropping back down. So keep an eye on that. Crude holding still at the second target from the double. That's what there's an interesting, if you do get above about 110 again, there might be a quick little pop, but longer term, I'm watching for this we now have a triple bottom here, holding at that harmonic and the first target. So if you start breaking down about below 104.30, 104.25, I'm going to be targeting the final completion back to the 100 to about 150 area. What else do we have? Oh, I wanted to touch on gold. Remember, Christoph pointed out that head and shoulders pattern, which Dow has triggered on the 1 hour. Okay, and on the 4 hour, it looks like it's going to trigger. I'm using the projections from the 1 hour, which is virtually the same. But this is why I keep trading gold around a core position, because, we ran up. And now it looks like we could get the bigger pullback. Just in a bigger perspective, I would love to see gold back down to 1877. And if we keep either a sideways market or a, unwinding of the VIX and the fear sort of trade goes off, first area I'm watching is right at the daily rotation zone with the first target of about 1933. And then if we started collapsing down through that, you're into an advanced clear path, which takes you to about 1891, but I'd really be watching for especially a spike low to about that 1877, and that's a reload area for me for stuff. Look at this. The second target area is this little resistance becoming support, and the final target is this little area. So keep in mind if you're looking to get in some gold. Silver, again, I'm watching. There's no great pattern in there, but I'm watching for it to continue to pull back in there. Notes are stalling out at that 87.5% retracement, but once we remember, I start targeting that 100% to 87% once we get below the 62. I'm still watching for notes to go lower longer term on any rally. I just now use that 62% as key resistance. Dollar index up slight, well, pretty much flat from yesterday's close, but it's up slightly based off the low to low basis. I'm still watching for a bigger pullback in there. Tesla looks like there might be a pre-market gap up. Again, we have this little much hated triangle pattern. Let's see where we are. Pre-847 looks like we're going to test the top of it. Still, nothing's changed from my analysis yesterday. We break above 860. I'm targeting 870. Then major would be 880. We had some pretty significant resistance up around 880. So we have a lot of resistance. See, even on this, I can't get super bullish, and this would only be super bullish short term until we get some momentum above 880. Breakdown area, my key area is about 794. You start breaking though below short term about 812, then I'm going to target 795, 795, then 782. Now let's see. Yesterday the SPY double at the 62.5 and 50 level close above was amazing. Great feeling to appreciate this concept. That was the trade. That was in the futures. That was in the spiders. That's where one good trade, you just be patient and wait for that one high probability setup, and it can, it can make your whole trading day. Other than that, especially if it's choppy today, don't force anything. Yeah, gold head and shoulders confirmed. Which ES and NQ contract you use? I'm still on March, and that flips next week to June. Yeah. March, I'll flip to June next week because at March expires. And I really, if I'm, for trading, I'm going to start executing on June, and even Friday today I'll start peeking at June to see the setup start getting better. Silver is the same potential head and shoulders. Let's take a quick look at silver. I did not look at that. I'm following the higher time frame, but yep, here's your silver. Let's do the analysis. Thank you, Christoph. I did not look at shorter. I'm just watching for that pullback in silver, sort of basing everything on gold right now, but here's our levels. Remember, we go from the head straight to the neckline. This hasn't confirmed yet though. So silver's still holding the neckline. So remember, I'm putting it right here for now to give us an idea. But if it takes a few more bars before it rolls over, you have to move this. You have to run it up the neckline to where it breaks. It brings the targets in. That on a bigger picture, look at that first target, and that might come in a bit. But is this prior? We're still holding this prior resistance becoming support area with the rotation zone on the daily, but we start breaking through there. I'm not even going to focus really on the bottom of the rotation zone since we're still in this huge choppy pattern. I'm focusing on this 2472 area, and then I'd focus on 2424 with the 200 and the rising 50. Let's take a look at NOV. I know options 22. And it's still holding up there. What was your question? Where should I consider pulling the eject button? I mean, this is a long term. Really, I wouldn't pull the eject button on anything, even short term. This is where this is why I won't overtrade a position. But see, even on a pullback to 1770, it's just this major prior breakout level. So if oil continues a pullback, that wouldn't even do it for me. Your problem with it depending on your puts, but you're out in where you're in May. Yeah, you could eat a little expiration. You can eat a little theta. I know you don't like to, but it's not going to be that bad because you're out in May. Where would I really pull the eject button on a core position, because I don't think that this is going to collapse back down, but really you start getting below the 200 would be my long-term eject button. As long as we're holding, and I would be surprised if we got below 1771. Short term, if you start getting below about 2060, I'd watch for starting with a bigger pullback. That's not a double right here yet. Now it could rally up and then I'll be watching, but this is still has a strong upside bias. So short term for any stuff I'm keying off, actually I dropped that down to about 2040. What were these lows? 2039. You start getting any acceleration down below there, but yeah, you're into a clear path. You could easily return to 1770. So if you needed to eject earlier on a shorter term, if you start breaking down below this low, I'd look for, because I'd look for the pullback then to this area and reestablish a longer term position. Again, educational purposes only. Can't give you specific trading advice because I am not your financial advisor, nor am I a registered financial advisor. I trade for myself. I let all my licenses expire. They've all expired, because there's no point in keeping them up. Where else do we sit? Let's see. Opened a put position on CVX yesterday. Looking good so far. Yeah, CVX was overextended. I'd be watching. You know, you do have this nice little double top in CVX. Now you have to, these are risky trades to the downside. I'm looking for pullbacks to establish long positions, but if you're nimble, you know, there are the targets on CVX you could easily see because of how extended it got. Look at that, even in front of the weekly rotation zone. So yeah, could this easily pull back that weekly rotation zone with those short-term double targets? Yep. And the nice thing is if you got something with we're getting some collapsing volatility in oil. Now, anything can happen with the Ukraine-Russia situation, so that's why it's a little higher risk. But you're going to get, if you have a position in some of the stuff that's taking advantage of reduced Vega, then you can really get some interesting plays. Putin positive talk, seriously, down to tax oil profits. It is a bear. Longer term, yeah, but you have to play the short term patterns. Agreed. Longer term, I have many bearish signals, and we'll watch for a rollover. But remember, the market will inflict a lot of pain to a lot of people, and there are too many people that tipped to bearish side, and we do have these slightly bullish patterns. So, and with options expiration next week, it could get really interesting with some pain points. Is Nvidia still a buy? I mean, it was an aggressive buy yesterday, but there's nothing I'm touching in this. Again, we're on a rally. There's just nothing. This is now a triple bottom formation. You know, this is just ugly. Not looking to do anything in Nvidia. There's much better trading to look at. Yeah, could it pop? But you have major overhead resistance at 235, so nothing. Not in these market conditions. Not with, there's no strong pattern here. You're against the daily rotation zone, which is why it was an aggressive buy. And your targets, remember, just because you get a buy signal, always look at your reward to risk. Because the first target area would be 235. So you're buying even here, you don't have much upside, but your stop has to be down here. So your reward to risk is horribly skewed. So that's why it's a nothing for me. Euro US dollar. Euro US dollar. Again, I had some sell signals on the dollar. Let's just see where this is sitting there and run up. It ran to that rotation zone, still holding. The only way I get bearish again on the euro is back below 109.20 area. Other than that, I have a slight bullish bias on this pullback. We already tested essentially the top of the rotation zone. So my next area, let me take off some of this other crap. I don't update the euro US dollar much in here on this charting platform. Uh, there's a little quick play though, potentially above 111.20 area. You into this clear path move, and the full target area would be up around 112.70. 112.70 to 112.80. Where would that be wrong? If we again get below this 109.20 area, I'm then watching for the return to the lows, which would be interesting because then you get down in this area, we could have a double bottom setup, but it would essentially be the same trigger area. So that's sort of interesting. You are welcome. I'm glad, yeah, more and more people are showing up. Thanks, Amit. You are welcome, Sterling. Again, thank you, Dave. I'm going to get prepped for the market open. Hope everyone has a trading day. By the way, there'll just be one update this afternoon at 3:30 Central. So if anybody wants to join me for that, we can take a look at any stocks and anything else. And then there'll be the update on Sunday. Have a great day, everyone. Trade well. If there's no trade, do not force it. And remember, stuff starts lightening up on Friday, with repositioning for the weekend, especially with these macro global events. So people are going to be more aggressively adjusting their positions to go home with a safer or possibly flatter position. So keep that in mind going into the last hour of trading today. With that, I will talk to everyone later. Bye for now.